Welcome to another edition of the Real Money Show with Guildhall Wealth Management. I'm Darren Long. I'll be hosting today as always. And beside me for today's show, none other than Paul Wiseman, the CEO of Guildhall Wealth Management, and a pleasure to have him. He has had one of the most busiest schedules that I can remember in the recent past, but thankfully with Jeremy on holidays for a week, well deserved by the way, Paul is going to be with us for an hour today on the show while we talk about silver and gold, natural fancy colored diamonds. We're going to have a couple of articles to discuss. And before we get started, I'll remind everyone listening that we are not your financial planners or advisors. We leave that up to somebody else. And we are focused on one thing, and that is bringing you the opportunity to own physical gold, silver, and natural fancy colored diamonds. We call it the insurance policy for your wealth. You might call it something different, but today's show, we are going to focus on those three things, and we're happy to do so because there is a lot to talk about, Paul. And before we get going, gold sitting right now in the 1286 range as we tape this show on Thursday and recovering from last week's lower price levels. Also, silver sitting at 1460 in that range, and also, like gold, recovering nicely after lower prices this past week. And I think both were slightly exhausted. Silver markets went back and forth.
That had a lot to do with the currency, though.
Sure.
The US dollar got extremely strong against a basket of 7 currencies, and therefore gold and silver took a little bit of a hit. Today, the currency is down about 20 basis points, so there's one of the reasons that gold and silver is moving up.
Well, we see a lot of volatility right now globally. The silver markets are taking a bit of a break after falling below the 1450 level, which makes quite a bit of sense considering that it was a very exhaustive move. If we can rally here, I think that, and we'll talk about it throughout the show, if we can rally and stay above this 1450 level, then we could see silver prices reaching back above 15 before month's end, which would be a pleasure and, of course, would surprise not us. But again, those opportunities that we have discussed for the last few months in this buying range as silver and gold have sat in a very wonderful area, very nice for a person to stack and start building and adding to their positions. They're going to leave. They're going to be gone.
This was an incredible week, especially after Victoria Day. The prices were a little low. It was a buying opportunity, as you said, to stack product. When you see silver drop down as low as 1437, this is a bargain. I don't think we're going to see these prices again. There is extremely strong support at 1440. As we're taping this show on Thursday afternoon, if we close above 1450, 1465, 1475 is the next move up, and then we expect it to break out above $15.
Right. Well, listen, if you want to start off the right way, I would suggest, as we're talking, if you have the ability to do so, head over to guildhallwealth.com. That's guildhallwealth.com. That's our website. There you can get acquainted with the products that we offer, and you can get more familiar with each of the accounts as we discuss them today and get to know them a little better. But this is all about one thing, and this is physical ownership. And we are experts in that particular arena, in the logistics or storage and movement of gold and silver around the world, and right here at home, where you as a client have the ability to store your gold and silver with Guildhall Wealth, or to take it home with you, depending on the type of account you open. But that website, guildhallwealth.com, we will give it often, is the place where I would start and get the free investor kit. Now, Paul, very interesting week. I read a number of articles talking about the U.S. marketplace. Today, we're going to bring into the fold a little bit of news about the real estate market here in Canada. And I know you had some things to say about a particular video that Jeremy shared with us prior to leaving on vacation, so we'll get to that in a minute. But the SRS Rocco report reported this weekend on an article called Top Primary Silver Mines Now Paying the Market $2 an ounce to take their silver. And we have mentioned this before. It might have gone in one ear and out the other to some people who don't really like the paper markets. We certainly don't really invest in the paper markets as far as silver and gold are concerned. We like the physical, hold in your hand, real commodity, nobody else's promise notes, and certainly not the volatility of a company.
As you say, the miners, for the miners to bring silver out of the ground, the cost is $16.54 US an ounce. Now, that's not fabricated. That's not put into bars. That's not put into coins. That's just the raw material. That raw material has to get transported, has to be insured, the logistics. It can obviously cost a little bit more than the $16.54. When you're trading silver at $14.50, you're already $2 ahead of the game. And I believe you're going to see silver and gold break out. We're looking at what's happening with the U.S., with Trump, with China, with Iran, with Venezuela. I think he's running out of countries at the moment to get mad at. But this is all going to make a big difference in the cost of gold and silver. When you have central banks like Russia, China, they're buying gold. Why are they buying gold? What are they worried about? Their currencies, their fiat currencies, paper currencies, because it's an insurance policy. Gold has been around for thousands of years. It's always been a currency, a true currency. And gold to silver, the ratio has been 16 to 1. That's 16 pieces of silver to 1 piece of gold. Today we're trading at a ratio of 88 to 1. The last time we saw this, I believe, was
beginning of the market. Pretty much, if we go all the way back to 2002.
Yeah, 2000. We saw some in 2006, 2007. But if you go back to 1971, when Nixon took the gold standard down, gold and silver was trading at 16 to 1. It's always been at that ratio. So when you're trading at 88 to 1, silver is definitely undervalued. So if we get to even half that rate, 44 to 1, silver is going to be trading at, $30. If we get down to 16 to 1, we're looking at $60 silver. And I strongly believe that we are going to see $50 and $60 silver very, very shortly.
All right. Well, this SRS Rocco report states the exact same thing that you just clarified for our listeners, that in fact, as of Q1 2019, the price to pull an average ounce out of the ground is now reaching $16.50 US, which is a $2 premium on where we are basically in the market right now. The typical investor that would go and buy a company as a stock versus physical ownership typically doesn't know very much about the benefit of real actual ownership. So if we were to compare the two, essentially buying right now means that you're getting
a 15% discount.
A 15% discount. And this article is talking about the understanding of how people have lost the ability to ration with themselves, to talk to themselves rationally about what a store of wealth is. And it says in particular, and picks on a couple of cell phone companies and saying how good they have been at teaching people and brainwashing the consumer to believe that a store of wealth is actually technology. Or an example was using, the two, a piece of silver or an iPhone, and saying which one would last 30 years underwater. Well, the silver would, because it's a store of value. That's the way it is. It's defined that way. And that is what we have always suggested. We've always said that silver and gold represent insurance for your wealth. And owning these two assets, not only does it give you the opportunity of a lifetime, being in the moment that we're in, where silver could rise, $100, $150 an ounce over the next 5-10 years. Gold could easily go to $5,000 an ounce. It also gives you the added bonus of being second in gold in particular is interesting, second only to REITs in the last 20 years in terms of the average return per year. Gold, as JP Morgan just said last week, had an average return over 20 years of 7.8% per year.
That's in the good years and the bad years.
In the good years and the bad years.
Basically 7 bad years, if you look at the price of gold and silver, because, when there's very, very low interest rates, there's only a certain amount of places that you can put your money. You can't put your money in the bank because you're not getting any interest. So therefore, property always goes up. Everybody seems to know about real estate. The stock market has done extremely well because, if you're going to get a dividend of 3-4%, it's better than getting no interest at all on your money in the bank. You're still taking a chance when you put your money into a stock. A stock can go from $100 down to zero. We've seen it before, whether it's a Nortel or other stocks to like that, Enron, all types of different stocks. Briex, yeah.
WorldCom.
But I was doing a little bit of research this week, and for example, if you look at this, we always talk about the States, because the reason we talk about the States, because when, they sneeze in the States, we catch a cold in Canada. It's always been that way. So, for example, auto sales in April were down 6.1% in the States. Mortgage applications dropped by 4.2% in April. Home sales for luxury homes have decreased an incredible amount. I was watching something on CNBC yesterday about a doctor, a plastic surgeon, who built a home in Beverly Hills, and it was $250 million to build this home. He's now selling it for $120 million, or if you want to pay $1.5 million a month to rent it. High homes are getting killed because of the taxes that states have incurred on people, where you can't claim back your mortgages. So there's a lot of problems going on. I mean, I'm not on the air today to scare everybody to death, but everybody seems to know about the stock market. They seem to know about cryptocurrencies, marijuana stocks, and that's what they know. When only 3% of the actual world only own physical gold and silver. Central banks own gold and silver. There's got to be a reason for that. But as I'm doing more research, I look at the US. 137 million people have got themselves into financial hardship in the US over medical bills, which is incredible. People's savings are getting wiped out. Delinquencies in credit card and auto sales are up. There's actually 552,000 people homeless in America today. 552,000 people living in shelters and cars and under bridges. It's supposed to be the wealthiest country in the world. That is crazy. Then we look at unemployment. The U.S. government says it's 2.93% are unemployed. 6.2 million are unemployed. In actual fact, it's 102 million people in the U.S. do not have a job. They don't qualify, or they've given up looking. So it's kind of scary. So I look at, all the figures that are coming out. I look at all the talking heads that are on all the business shows. Yeah, they're there to sell their stocks. We're not in the business of selling paper. At Guildhall, we sell physical gold, silver, platinum, and palladium. We don't sell equities. We don't sell ETFs. We don't sell futures. We don't sell options on futures. We don't sell certificates. We sell the physical product. You can take it home. You can go to our website, guildhallwealth.com, or go to guildhallpreciousmetals.com. You can buy gold and silver, take it home. We also give you the ability to store product. I don't recommend you buy a lot of product and take it home. I mean, you're putting your family in jeopardy of home invasions. Put it in a safe, secure depository where it's allocated to you and it's segregated to you. And the other thing that we offer, which, we're going to talk about, is registered accounts where you can buy gold and silver and put it into a registered plan, whether it's an RSP, a TFSA, a LIRA. And again, give us a call and we'll be happy to give you some information on that.
Guildhallwealth.com is the website. When we come back, Paul is going to talk about his favorite account at Guildhall and much, much more, including housing updates, what the CBC had to report about foreign buyers in the housing market here in Ontario, and a lot more on where we're heading in terms of pricing for silver and gold. You are listening to The Real Money Show with Guildhall Wealth Management on Global News Radio, 640 Toronto. Welcome back to segment number 2 of The Real Money Show. I'm Darren Long. I'm the host of this show, and I also work for Guildhall Wealth Management. With me today on the show is Paul Wiseman, CEO and President of Guildhall Wealth. And Paul, that first segment went by very quickly, but in that segment, we got to the end and we mentioned that you were going to discuss with our listeners your favorite type of account. Now, I know for a fact what this is going to be without even asking you, but with silver down in the 1460 level, how can one not get excited if they've read about the truth, if they know the story of where we expect silver to go? How can they not get excited? How can they take advantage of it? What is, in your opinion, your favorite account? Tell and share with our audience.
My favorite account is owning gold and silver, physical gold and silver, in what we call an allocated financed account. This is where you get to buy the product. You're buying, for example, silver. If you were buying 10 100-ounce RCM silver bars, 9999, that's 49 silver, that's 999.9, pure silver bars, which are allocated to you. But instead of, for example, if you're going to buy 1,000 ounces of silver, it would cost you, around about $16,000 US with commissions and and spreads and everything else. Now, instead of laying out $16,000, what you're actually laying out is $6,500. So if silver's trading at $15 as an example, for you to double your money would have to go to $30. But by putting up $6,500, silver would have to move up just $6.50, $7, give or take, to $22, and you've doubled your money. So if you're going to buy, for example, 5,000 ounces of silver, and we're trading right now in the $15 range, and silver moves up to $22, you've doubled your money. If it goes to $30, you've almost tripled your money. And if we go back to where we were, in 2011, when silver went to $49, and that could easily happen. I believe silver can go to $60, $70 over the next couple of years. I wish my crystal ball wasn't foggy, because I'd love to tell you the day and the month and when this is going to happen. But I look around me and I look at all the things that are happening. The stock market's had a run up. Real estate has had a run up. Cryptocurrencies had a run up and came down. Marijuana stocks, again, the same type of thing. What goes up must come down. So what you've got to look is at the downside. Silver in 2011 hit a high of $49. Gold was $1,930. As we're taping this show today, silver is trading at $14.62 an ounce, and gold is trading at $1,285 an ounce US. There is more upside than downside. We are not financial advisors, but you've got to look at the way to make money and to protect your hard-earned cash. Everybody has an insurance policy. Not everybody, but most people. They have home insurance, life insurance, car insurance. You don't want to collect on your life insurance, but everybody has it to protect their families. And I'm looking at gold and silver right now as an investment to protect my family and my assets.
All right, in order to get information about that account and what you've just discussed, allocated financing, head over to guildhallwealth.com. Let us set up something for you. We can show you what it would cost to use that account. But keep in mind, this, and we'd be the first to say it, is not for everyone. We don't want you to borrow, beg, plead for money to do something like this. If you have $1, use 30 or 40 cents, hold back the rest for a rainy day. And then if you get the opportunity at lower prices somewhere down the road, after you've made some profitability, put that money back into the market if you like, and then maybe add at a better price in cost average overall. The opportunity here is at such a low price. In silver particular, we love gold as well. You can put both together in that allocated financing account. And as always, remember, when the market moves up, the first goal is protect the principal. Use what you've made. Don't be greedy. This is how you use this account of allocated financing and the concept of other people's money. It's very simple. And we want you to excel. We want you to exceed. We want you to have success by owning an account like this today. Again, remember, it's physical silver. Hold in your hands. It's not a paper promise. This is bars that are serialized. You get those serial numbers. They are your bars. You can go visit your product, hold on to it anytime you like, or as we will talk throughout the show, you can open up any other type of account. And even if you want to take the product home, just shop online from the comfort of wherever you are right now. Guildhallwealth.com is the website. Now, Paul, if we see a move of $6.50 in, let's say, the next 4 to 5 months, to you, is this surprising?
No, not at all. I mean, I just think gold and silver is so undervalued. We talked about in the first segment, it costs $16.58 US to bring silver out of the ground. That's not being refined. That's just silver coming out of the ground that's got to go to a refinery and is going to be put into bars or is going to be put into coins. There's also some people's markup that has to go into that. Nobody works for nothing. But we believe that the price of silver has been so driven down. There's a reason for it. I mean, nobody wants to use the word manipulated, but the market has been manipulated. And I'll say it today on the air. The market in gold and silver has been manipulated. But the paper, what's being sold every day and manipulated is paper, not physical product. And at Guildhall, I have to keep on saying, we sell physical product. You can touch the product. You can hold the product.
And take it home with you.
The product home. That's what we do at Guildhall. We've been on the air a long time. We've been in business a long time. We look after our customers. Yes, the markets go up and down, but you've got to look as well at the stock market. You've got to look at real estate. You've got to look at everything that goes up comes down. And we're at a stage right now where silver and gold has been beaten down. It's got an incredible amount of upside. And when I see central banks buying gold, whether it's Russia, whether it's China, even Venezuela, sold off some gold last week, to pay their bills. Lucky they had the gold. England doesn't have any gold. They sold all their gold off in the 60s or 70s when, Brown was the Chancellor of the Exchequer. They wish they had gold. Before the war, they shipped all their gold to Canada so the Germans wouldn't get hold of their gold. But then, foolish enough, they sold it when gold was $250 an ounce. Wouldn't they like to have it back now?
They sure would, I can tell you that. And with Brexit the way it is and the problems being presented in Britain, I am 100% certain they would love to have that gold back. Now, Paul, that's one thing to say what we think gold or silver is doing already, but I find it interesting to get from time to time phone calls from clients who have participated in this market since day one. They're not necessarily holding because they want to buy or sell. These are long-term holds, and you had an instance this week, which I think you should share with our listeners, in which a family called, and there was an unfortunate passing. I mean, this happens, but tell them how ecstatic they were about the fact that they had owned an asset which made them money.
Yeah, their mother had passed, and the lady actually bought silver from us in 2002 at $4.52. She had originally bought about 10,000 ounces. When the market was moving up to $49, she was selling off product, paid the debt off. The product was paid for in full by when silver went up to, $20, $30. All she had to do was sell off a couple of thousand ounces, and that cleared the debt. But she sold off in $48, sold off at $35, and was left with actually 1,000 ounces of silver, which we sold off last week. But in that time, she had been taking money off the table. As the market rose, she sold off product, took the cash back, which we had always said makes a lot of sense to do. But the original investment, 10,000 ounces, wasn't a lot of money. I think at the time it was about $18,000 to buy the product, including commissions, and that money was paid back over and over again. So it just shows you if you hold, you don't day trade your house. You don't have to day trade gold and silver. It's a long hold. It's there to protect your wealth. When the market does move, you have to take some profit off the table. Whether we believe it's going to go to $60, $70, it could go to $100. But why wouldn't you take money off the table as the market moves up? We don't mind. We're happy to send your money back. But anyway, if you want to get into allocated finance, it's not for everybody. It's if you have a spare, $8,500 Canadian, buys you 1,000 ounces of silver. You got a $25,000. You want to buy, 3,000, 4,000 ounces of silver. This is a great way to get into the market. Watch the market move up. You can pay off the debt anytime you want. You can take delivery of the product, even though it's in a safe, secure depository. It's a great way to get into this market.
Guildhallwealth.com is the website, or use the number 18778-SILVER. That's an easy number to remember, especially if you're driving right now and you can't get your hands off that wheel. 18778-SILVER or guildhallwealth.com. Before we go to break here, I'm going to introduce something that we're going to discuss in the third segment, and this is a review of the year ahead for U.S. housing. This is not a rosy picture. It's by David Haggith. It's an article called Housing Collapse 2.0 Continues as Predicted Here. And it goes hand in hand with what we have been saying about the U.S. marketplace. And you in particular, Paul, are very keen on understanding why Trump has decided to take on so many things at once that he's going to be unable to do much about it. And when we get back in segment 3, we're going to run over a little bit of that and also touch on CBC talking about what has happened with foreign buyers in the Ontario housing market and how that relates to gold and silver, folks, and why we believe that if you are an investor in real estate, you should own gold and silver. That and much, much more. You are tuned into The Real Money Show with Guildhall Wealth Management. You're listening to Global News Radio 640 Toronto. And we're back. The Real Money Show, Guildhall Wealth Management. Glad to have you listening. We want to thank you. If you are a new investor, if you've bought silver and gold in the last couple of weeks, or you now own a beautiful natural fancy colored diamond, then we are going to be thanking you. You're part of the Guildhall team now, part of the Guildhall family, and that's a family which is steeped in tradition. We have, as Paul said in the last segment, been around since 2002, and it's been a lot of fun. And these cycles, Paul, we know and have seen and witnessed them time and time again repeat themselves, and we're nowhere near what the top of these markets is going to be. But before we went to break there, we were talking about housing briefly, and in the U.S. this week there was an article out published by an analyst named David Hageth called Housing Collapse 2.0 Continues as Predicted Here. Now, he is an analyst in the housing market there.
Is that U.S. or Canada?
This is U.S. We're going to talk about Canada in a second. And he says that existing home sales were down again nationally, 4.4% in April, which is the 14th month in a row of declining sales year on year. That is the longest stretch in the U.S. without a single positive month since the housing market collapse that brought on the Great Recession. And so far, he says, as I am aware, I was the first to state that what we had seen by the start of July 2018 was clear evidence that the housing market was going into another decline. Now, he pointed and showed by chart, which we will include in this week's newsletter. If you haven't already signed up for it, guildhallwealth.com is the website. Go there and get it. And he shows a chart of, it blows me away. It never ceases to amaze me that despite all of the pain felt in 2008 and 9 and what the blow was after, that nobody learned their lesson. But you'd think here at home in Canada, where housing prices didn't take the same type of hit, that we would have minded our P's and Q's, that we would not have crossed those same boundaries like they did in the U.S. But the truth is, Paul, the CBC just put out a report this past week talking about foreign buyers drying up. And now they're touting this report as being a good thing, that in fact the controls...
They did all their money laundering. It's done.
Yeah. The controls that the Liberal government have put in place are working. But we know better than that, because we told you folks years and years and years ago that the second the foreign buyers start drying up in this marketplace is the second that the marketplace falls apart, because nobody, and I mean no one, because the data was not made available publicly, knew how much percentage-wise was being bought in the core areas of Vancouver and Toronto, in Calgary, in Edmonton even to a certain extent, Montreal, all those core areas. Nobody knew what the foreign ownership was, and now we've heard two stories within a month and a half, one out west, which is now being examined with a fine-tooth comb, and they are going to be pressing with lawsuits galore. And what does this tell us? You have to insure your wealth. If you're an investor in housing and you're looking at the Canadian market, most of the regions around the GTA, they've already seen a 10% pullback in house pricing, and we haven't so much as said two words about it in the media. Protect yourself. You got to own some gold and silver.
Yeah, I guess in the real estate they had the bidding wars. We have a friend that put the house up for sale. The agent came in and listed it low. They had two offers. So I guess it's not as rosy as it used to be. People are not going to be moving, probably just doing some renovations at home instead of speculating on real estate. But let's get back to, the allocated finance accounts.
So head over to guildhallwealth.com. There you'll get a wealth of information. And not only will you be able to find out much about gold and silver and ownership and the accounts we've just talked about, and we're going to get on a couple of accounts again in a minute, but also about natural fancy colored diamonds, one of the best kept secrets, one of the investments that has long been a secret of those with wealth, but now coming into the mainstream. And I'm happy to say, Paul, we've been participating in this market the whole time, and it's been exciting to see it because it's allowed us to sleep at night, but also to look forward to the future and what that future holds. It's a tremendous opportunity.
Yeah, owning a natural fancy colored diamond is an incredible investment. It's been around for a few years, savvy investors have known about it. That's why we're seeing at auctions pink diamonds and yellow diamonds going for incredible amounts. Diamonds that were purchased maybe for $1.5 million 30 years ago going for $50 million, and in some cases much, much more. At Guildhall Diamonds, what we try to do is go out and buy the best of the best. When we're buying a natural fancy colored diamond, we're not only looking for the color, which has to be evenly saturated, we're looking for the best cut, we're looking for diamonds that have, in yellows, no inclusions, so internally flawless. Unfortunately, in pinks, they don't come internally flawless because that's the natural of the diamond. They do come with inclusions, but very slight inclusions. So we try to buy the best of the best always, because sometime during that ownership, we're going to get that diamond back for resale. Whether it's in 7, 10, 15 years, a client wants to turn that diamond back into money, we're going to resell that diamond for them. So it doesn't make sense for us to buy garbage. In the first place, we buy the best diamonds that are available to us. We deal with maybe 4 or 5 selective cutters and polishers that we can rely on. Every diamond we sell comes with a GIA, which is a Gemology Institute of America. That is the certification of that diamond. We look to buy the best, as I said. So, for example, if you're buying a yellow diamond, we like intense and vivids. We look for internally flawless. We look for diamonds over a carat. These are the diamonds that hold their value. It doesn't necessarily mean that a yellow diamond is going to double in 5 years or 7 years, but there are certain years where diamonds just increase in value at an incredible rate because a mine closes or a diamond is put into auction, or there's several different reasons why a diamond can go up in value due to shortages. This is why when you buy a natural fancy colored diamond, you want to buy something that is top notch. The cream will always rise to the top. And the diamonds that we sell, nobody's ever lost a penny buying a diamond with Guildhall. And we will always keep it that way because we like to sell the best. Now, you can get involved with a diamond in a setting for as low as $18,000 in a fancy yellow, internally flawless. If you're looking to get engaged, people buy white diamonds on impulse, whether it's an engagement ring or some type of celebration. I can tell you, unless you're buying something like a 15, 20 carat white in D, which is colorless, which is an incredible stone, and internally flawless, those are the type of stones, because of the size and because of the quality, will go up. The average diamond that is sold in any retail jewelry store will be a D, or not even a D, probably F, G, H in a VS or an SI. These diamonds, there are so many of them around, they can never go up in value. It doesn't, if you're buying it as an investment, it doesn't pay. But if you're buying it, obviously it's a sentimental thing. You're getting engaged. You want to buy something. You're going to buy your fiance whatever she desires. But we recommend go with a yellow. Now, if you're looking at pinks, we love the Argyle diamonds. The mine is closing in 2020, 2021 for sure. These are the diamonds over the last 10 years of high quality, over a half a carat, have gone up about 359%. So we believe in pink Argyle diamonds of the highest quality. If you're looking to invest, you're looking to put your kids through university, you're looking to retire 10, 15 years down the road, buying a natural fancy colored diamond is a must.
Guildhallwealth.com is the website, or use the number 18778-SILVER. We'd be happy to send out a package to you, including information on natural fancy colored diamonds. And I think the best thing to do, Paul, is to help people understand a couple of things. One, can this all be put together? The answer is yes. And whatever it is that you want, we can put it all together in a package: gold, silver, natural fancy colored diamond, all three of them to suit your budget, your needs. We can accommodate that at Guildhall, and we'd be happy to do that for you and walk you through each step of that process. It couldn't be easier. If you want to sit down with us in offices, call the number 18778-SILVER, or you can go to the website guildhallwealth.com. And Paul, the beauty of this is the fact that we can highlight some of the product and the way it can be broken down in terms of budget, whether it's taking 1 ounce Royal Canadian Mint gold bars and coupling that together with some 100-ounce Royal Canadian Mint silver bars and adding a yellow or a pink to that, or whether it's working with clients that like slightly bigger denominations. Maybe they want a kilo of gold at a time, which is quite common also, and maybe they want to take all those 100-ounce bars and maybe put that in storage. There is an opportunity for everybody's taste and everybody's budget.
Yeah, we had a couple of weeks ago, a couple came in and they bought 2 diamonds for their children. And they also bought some gold and silver for their kids. This is a way to look after their education in the long run. I mean, I have 3 grandkids now, but my 2 grandkids, every birthday I give them an ounce of gold. I've been doing this since gold was trading around about $400. One of my grandkids is going to be 13 at the end of this month. And I've got another one that's 11 next month. You know, between them, they're going to have 24 ounces of gold. Whether gold is trading at $1,300 US, that's a chunk of cash. Now, did I miss the 1 ounce of gold when it was $400, $500, $600? I even gave them gold when it was $1,900. But on average, they've got between them, as I said, they will have 24 ounces of gold, which, right now in Canadian, it's about $1,700 an ounce. It's a chunk. That's going to pay for their education. They can do whatever they want to do with that. I'm happy to do that. But if you have kids, if you're looking to retire, if you're looking to put your kids through university, having a natural fancy colored diamond is one way to protect yourself as well against these markets, these fluctuations. The stock market is starting to, get a few breaches here and there. And if it collapses, we can see a 30 or 40% collapse in the stock market. You need to have something that's safe and secure, and that's gold, silver, and a natural fancy color diamond. And that's what I prescribe.
All right, when we come back in the next segment, the last segment of the show, we're going to talk about Trump's juggling act. Is it good for him? What does it mean to gold and silver? And what do you think he's going to get done, Paul? We're going to answer that question when we come back. Again, we're going to talk about GM payouts in Oshawa. Big topic and on everybody's mind. There has been a conclusion on the issue. Some people are staying, a lot of people are going. What does it mean for you and your payout? Do you have an option there for gold and silver? You do. We're going to talk about that and putting it all together. What accounts might be right for you and how you can add gold and silver and natural fancy colored diamond all together, and that and much, much more here on The Real Money Show with Guildhall Wealth Management. You're tuned into Global News Radio, 640 Toronto. All right, here we go. 4th segment, The Real Money Show. Welcome back. You are tuned into this Real Money Show with Guildhall Wealth Management. And with me today on the show is my partner here, Paul Wiseman, the president and CEO of Guildhall Wealth Management. He's been talking today about a number of topics, kind of putting it all together in a 4th segment here, Paul. And before we went to break, we talked about Trump's juggling act. Whether you like him, whether you hate him, it's indifferent or not. The whole idea that the U.S. is going to move ahead here is getting less likely by the day. And it's because he's juggling so much.
He is juggling. It's like the old jugglers with the sticks and the plates and spinning. Sooner or later, plates are going to drop. He's giving too many head fakes. He tweets too much. He thinks he can move up the market by just saying something. This thing that's going on with China, with tariff and trade deals, it's not good. Eventually, the consumer, Joe Public, is going to pay the bill. Right now, even in Canada, we're paying premium on everything that comes across that border because our currency is trading around about 134, 135 against the US dollar. It could get a lot worse down the road if these tariffs and these wars keep going on with the US and China. It could be very, very bad for everybody. But we were talking earlier about what we could do as a package. We like to have our customers have gold, silver, and a natural fancy colored diamond. When you come to Guildhall, we have the product. You can sit down with us. We can explain every diamond to you. We can explain every package to you. We have complete transparency. That's what people like, that they can sit down and get an education of what they are purchasing. When you go into a jewelry store, you're dealing with somebody that's charging for a ring or a necklace or a bracelet or whatever they're getting, there's a set cost. They really don't know too much about the diamond. Every diamond that we sell, there's a lot of hard work goes into purchasing that diamond. I review diamonds. We look at every GIA before we even see a diamond come through the door. If the specification doesn't meet our criteria, we don't even look at the diamond. And the reason for that is if a diamond is not cut very, very well, there's no scintillation, there's no fire, there's no colors that come off of the diamond. So the diamond has to be cut perfect. It has to be evenly saturated in color. The carat weight, if you're buying a yellow diamond, for an example, and it's under a carat, that's not investment grade. It needs to be over a carat. Yet in pink diamonds, you can buy a diamond that's 0.24 or 0.25, a quarter of a carat, because they are so rare and they normally come in smaller sizes. So can we put a deal together for you? Yes, we can. Buying some gold, buying some silver, buying a diamond. You look at your budget, we can cut the cloth, your suit according to the cloth. So that's what we will do. We will make a package for you, whether it's gold, silver, and a diamond.
Guildhallwealth.com is the website to go to. Visit it often because you're going to check back and see little differences every now and then. A new diamond here or there, a new gold or silver product. And speaking of products, a highlight this week, the product of choice for our clients in gold is the 1 ounce Royal Canadian Mint vacuum sealed gold bar. Not only does this bar come in a delightful branded package with the Royal Canadian Mint insignia and logo on the bar itself, it also includes a serial number and an assay proving that it has unequivocally passed all of the tests and that its purity is exactly as stamped. 4 nines. It is the finest product in the world in terms of 1 ounce gold bars as far as I am concerned, and it is the most frequently bought product at Guildhall Wealth in terms of gold. Now, in putting it all together, Paul, there is some news on the GM buyout that has come to light, and it turns out that the company has offered retirement incentives of around $130,000 on average to the 2,600 less 300 that are staying workers, and a $10,000 car voucher for those who have 30 years of service and less than 10 years of service. They're going to get it. Yeah, it's a big deal. No, I mean, people are going to get killed no matter what. This is just the way and day and age we live in. But protection can come out of this. Positives can come out of this. I would speak to anybody that's getting a GM buyout and say to them, look around, shop around, experience some new things, try and put together something that might be slightly different. Don't use that payout necessarily for the same old traditional things you've always done. If you're listening to the show and you work for GM, first off, we are absolutely devastated like you that this would come to this. But the good news is,
after a bailout.
Yeah, of course. The good news is you have an opportunity here with respect to your buyout to do something good for yourselves long term and your family, and that is insure your wealth. Maybe you'll take that payout and you might have a registered account, an RSP, a LIRA if you're retirement, a TFSA, a RIF, LIF, whatever you can do to benefit your wealth long term. We have an option for it in terms of our registered accounts. And for every $5,000 US you put into those accounts, we're going to give you a gram of gold absolutely free of charge up to a maximum of 10 grams. And in particular, Paul, I'm very keen to speak with some of these people to get a feeling of where they go from here, because this has been a devastating thing to have to follow along with. And this is a lot of people that are being impacted by this, but hopefully, if they're up for it, we'd love to share gold and silver with them.
Yeah, absolutely. I mean, we're in the business as well of educating people. People are so unaware of, their investments. We always talk when we do seminars, and we ask people what mutual funds they've got and, what stocks are in those mutual funds, and nobody ever knows. It's very rare that somebody comes up and knows what they're doing. We are not financial advisors. We've been in the metals business, the precious metals business, and the diamonds business since 2002. It's our job to get you the best product, the availability of the product, and to make this very, very easy, make it very, very transparent of what you're doing. I said in the earlier segment that only 3% of the world owns gold or silver. That's 97% don't own gold or silver. They may own a little bit of jewelry, but to me, that's not owning gold and silver. To own the physical product, to own the bars, it is safe, it's secure. We can store it for you in our depository. It's allocated to you. It's a great way to protect your wealth. I look at the price of gold and silver today and I say, it's down. But you know what? I buy on a regular basis. I don't even look at the price. I buy and I stack the product. Stack the product means I keep on buying. It doesn't matter what the price is because I eventually know the price is going to go through the roof. And it will happen. We've seen it before. We saw it in 71. We've seen it in 2011. It's due again. And gold and silver, you know, all the gold that's ever been produced is still above ground. It's in jewelry. It's in bars. Silver is being used up at an incredible rate. It's used in every piece of equipment virtually today, whether it's a flat screen TV, your cell phone. So this is, you know, a product that's being used up at an incredible rate. The price is so undervalued. We spoke about what the cost of bringing silver out of the ground to mine it today is $16.58. Silver is trading at $14.60. That's 15% discount. You know, if you went into the supermarket and you saw tins of salmon, if you use it, and it was at 15% discount, you would buy it. So why wouldn't you buy some gold or silver? It makes sense to do that.
Guildhallwealth.com, the website to go to and visit often. Get yourself a free investor kit. We'd love to send it out to you today, either via email or by mail. And if you want to give us a call, that number is 187-78-SILVER. Go there, shop online, and find out more about owning gold and silver, as well as natural fancy colored diamonds. Now, Paul, as I was reading through that article in segment 1 before we end today's show, I was interested to find out that as I was reading along, he would actually tell you which mines were producing at what cost. Now, we don't believe in paper. We never have. We are physical buyers and sellers. We own physical ourselves. But it is very interesting to see that these public companies, which we can state here, some of which you may know and you may own, are pulling silver out of the ground at exorbitant costs, the highest of which was Endeavor Silver, averaging $22.27 per ounce to pull out of the ground. So they're losing $8 of value, you know, to just pull out an ounce of silver from the ground. How long can a company survive with that kind of cost? And if you look at some of these names, Great Panther, Coeur d'Alene, Hecla, First Majestic, Fortuna, they're all on this list, and this chart shows it. You got to have this. It's a must-have. You get it in our weekly newsletter by going over to guildhallwealth.com, and of course, you can always ask for an investor package. We'd be happy to send that out to you too.
But also, you have to look, when they're losing money pulling silver out of the ground. Remember as well, silver is a byproduct of gold, zinc, and copper mining. But when they're losing money, they're going to pull the plug sooner or later. They will bring up enough inventory and they will stop mining, and the prices will go through the roof because there will be nothing to come out of the ground. Whatever they've got in inventory will be in inventory, and they won't mine till silver goes back up to $40.
All right, well, listen, we've had a lot to say on today's show. You can get this show by podcast. You can always pick it up. Just type in The Real Money Show while you're at Google, and you'll find it anytime, any place, anywhere you'd like to listen it to. And as we go and leave this week's show, I will remind everyone that if you are opening a registered account, putting gold and silver into a TFSA or an RRSP or a RIF, LIF, RESP for the kids, whatever type of registered account you want to open, there is a bonus incentive. That is 1 gram of free gold for every 5,000 US that you are going to put into those accounts, up to a maximum of 10 grams, free of charge from Guildhall. A thank you of sorts for coming into the market, and getting us into the market is what we're here to do. We'll help you every step of the way. We'll hold your hand every part of the day. Guildhallwealth.com is the website. Paul, just before we go, a couple of quick...
Yeah, I'm off to Vegas at the end of the month for the
Diamond Show, JCK.
The JCK show, and we'll be bringing you some really interesting information of what's going on in the diamond business right now.
We'll be talking over the next couple of weeks about seasonality and why this has been traditionally the best time of the year to buy gold and silver. That and much, much more as the next shows come up. Please stay tuned. You have been listening to The Real Money Show with Guildhall Wealth Management on Global News Radio 640 Toronto.